Hello, I'm Hazem Seeker. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, a red light for Uber as legal challenges grow. We'll look at whether its business model can survive in its present form. Also this week, oil rebalancing as prices enter a bull market. We'll look at the factors at play. Plus, how Uruguay's legal marijuana industry is facing a threat no one predicted. Hello, technology giant Uber has changed how people all over the world hail a taxi. And just like Google, it's got its own verb, to Uberize. That means to change the market for a service by introducing a different way of using it. You might say Airbnb Uberized the property rental market, for example. Uber's popularity has made it an indispensable car ride service in cities all over the world. The $68 billion company is planning an IPO next year, and now the challenge will be to disrupt its own business model to adapt for survival. But in 2017, a series of scandals over its business practices and its treatment of workers has kept Uber in the headlines for all the wrong reasons. And it's being stripped of its license to operate in London now, one of the biggest markets for cabs in the world. Nadeem Barber looks at how that decision is going down.
For the last year, Gulab Singh's been driving for Uber. He works 6 days a week and says he makes enough money to support his family. He enjoys being able to choose when he works. He's one of 40,000 Uber drivers in the British capital, but now the regulators Transport for London, who run the city's buses and underground trains, say they won't extend Uber's licence beyond the end of the month. For many people who've got used to the service, it's a shock.
It's so easy for us to go from one place to another safely and quickly. So no, it's a shame, it's a shame.
When Uber came out, I was like, oh, all right, okay. It's obviously not as cheap as getting the train, but I still feel like I don't feel like I'm paying ridiculous amounts.
TfL say Uber's shown a lack of corporate responsibility in areas such as the reporting of serious criminal offences. It follows allegations that Uber drivers suspected of sexual assaults were allowed to keep driving.
TfL have spent some time going through the regulations that Parliament's given them in relation to deciding whether a private hire vehicle operator is fit and proper. They've looked at the evidence, and TfL have concluded today that Uber aren't a fit and proper private vehicle operator. There are real concerns around safety and security.
Uber has come out fighting, suggesting TfL's decision is motivated not by safety concerns but by politics, and promising to fight the move in the courts.
By trying to ban Uber in London, they're caving into the pressure exerted by a small minority that want to restrict consumer choice and competition. You know, this decision, if it holds true, will mean that over 40,000 licensed drivers will be out of work.
Traditionally, after a night out in London's West End at a theatre, say, or at a restaurant, people would hail a black taxicab. But 5 years ago, Uber arrived and caused a sensation. With just a few clicks on your mobile phone, you can get to where you're going to at a cheaper price. But of course, it's caused controversy as well. Last year, Uber driver James Farrar took the firm to court, arguing drivers should be treated as employees with rights to the minimum wage and sick pay.
What TfL, the mayor and Uber should do is they should evolve regulations for the 21st century. They should enforce and develop regulations effectively, and they should protect worker rights of drivers.
Uber can carry on operating in London at least until appeals have been exhausted. But this is one more setback for a firm that's been hit by legal challenges and protests around the world, and also made life easier for millions of people.
Well, joining me now from London is Carl Benedict Frey. Carl is the co-director of the Oxford Martin Programme on Technology and Employment. Thanks very much for being with us. Now, we're talking about a huge market in London, aren't we? How damaging is this for Uber globally?
Well, London constitutes roughly 5% of Uber's driver space, and the UK is its second largest market in Europe. So indeed, this would be quite a significant blow to Uber.
And while Uber's been great for consumers, it's often seen as being bad for the labour market in form of less job security, lower pay and all the rest of it. But you did a study on the impact of sharing economy platforms like Uber on jobs, and what were some of the findings?
Well, what we find is that actually after the introduction of Uber, employment in taxi services expands quite significantly. So overall, Uber creates jobs rather than destroys them. It expands the labor market for taxi services. But what happens then, obviously, as labor supply expands, is that there's more competition, and that tends to drive down wages for incumbent drivers, which is a side effect of that success, if you like. But in addition to that, there's also survey evidence that suggests that Uber drivers are actually very happy with their lives. They value the flexibility that the platform offers them. They're quite content with the financial compensation. So on balance, I think that most of the evidence actually suggests that Uber drivers fare reasonably well.
Now, a lot of people are saying that this could be a game changer for the gig economy, that other governments may feel emboldened now to more heavily regulate companies like Uber. Do you think that could happen?
Well, it's possible. I mean, we will see what kind of a deal that is made, if a deal is made. I think this is quite actually a high-risk game, because the consequences of Uber actually being bad would be very bad for London consumers. A lot of people have actually structured their lives surrounding the availability of Uber. Quite a few people actually even use it to commute to work. It might constitute a risk to real estate prices in some areas of London that doesn't have good access to public services. So I think that the TfL is actually playing a high-risk game in this regard, and this may equally constitute a blow to the City of London as it does to Uber. So we will see what happens. I think what the outcome of this process will very much determine how other countries, cities and regions proceed with this.
The Uber CEO has said, obviously, that they're going to fight this decision, and they say that it's based largely on what they say is Uber's bad reputation preceding it. Do you think that's fair criticism?
I think what the sharing economy does is that it constitutes a trade-off between flexibility and security. And the labour market functions best when you have both. So what legislators should do is to make sure that this gig economy, this sharing economy, can exist side by side with normal, with the traditional labour market, and that requires legislations to make sure that both function well in parallel.
Carl Benedict Frey, thanks very much for being with us. Uruguay is the first country in the world to make it legal to grow and sell marijuana, but now the new industry is facing a threat no one predicted. Daniel Schweimler reports from the capital, Montevideo.
This is nothing new. It's just that marijuana is now, after a long campaign, totally legal in Uruguay, and business has been booming.
We think that the risk is worth the final result, that will be a democracy that respects their citizens' right to love a plant and to have a plant on the intimacy of their houses and to smoke if they want.
Each registered user can buy up to 40 grams a month from their local pharmacy. But Uruguay's banks are now threatening to close the accounts of those pharmacies selling the drug, stopping their use of plastic cards. They say they're under pressure from US banks, which by US law cannot trade with any company linked to the illegal drug industry.
We see an absurd situation. The Uruguayan financial situation is being penalized with strong legislation which is not in place in Canada or the US. But this has nothing to do with drug trafficking. It's totally legal.
Uruguay says the US has got it wrong, that their marijuana industry is now legal. A delegation has been to the US to put their case, while the industry is looking at selling outside the bank system.
The system is now strongly regulated, very controlled. The state is heavily involved, so that's why we feel it'll be easy to show that we have nothing to do with drug trafficking or money laundering. Business is being done in legal enterprises, controlled by the state.
He says pharmacies are queuing up to sell marijuana when the financial obstacles have been removed. This is as normal and as legal as growing tomatoes. A backroom, backstreet industry is emerging from the shadows and taking its place in mainstream Uruguayan society. Those involved say there's no going back. Uruguayan users say legalization has seen the illegal drug trade reduced, while the stigma attached to marijuana is receding.
Now you're sure you're going into a business premises which is open to the public, so now you're not in danger.
The move still has opponents, both here and abroad, but Uruguay's growers and smokers say marijuana use is now so normal, many are wondering what all the fuss was about.
Still to come on counting the cost.
The tiny Baltic country of Estonia already has one of the internet's most recognisable brands, but how do you replicate Skype's success? I'm Rory Challens in Tallinn. Keep watching to find out how this country is putting tech innovation first.
But first, some other stories we're watching this week. Saudi Arabia ended the kingdom's reign as the only country in the world that bans women from driving. The move is less about addressing gender inequality than an effort to modernize its economy. Women still only make up 20% of the workforce. According to the World Bank, women face gender-based job restrictions in 100 economies around the world. Now, the world's largest mining company, BHP Billiton, said 2017 will be a revolutionary year for electric cars. It is predicting electric vehicles will make up around 8% of the global car fleet by 2035. And that electric future will be felt first in the metals market, especially copper. That's because fully electric vehicles require 4 times as much copper wiring as a petrol or diesel car. James Dyson, the inventor of the bagless vacuum cleaner, is turning his attention now to the electric car market. He is designing what he says is a radically different car from current models and will go on sale in 2020. Budget airline EasyJet also announced this week it wants to fly electric planes within the decade. It's teaming up with the US startup Wright Electric to build an all-electric airliner. Now, a trade dispute between the US and Canada is threatening the jobs of thousands of aircraft workers beyond North America. It involves US aviation giant Boeing and Canada's Bombardier. The US has slapped tariffs on the new Bombardier C-Series plane. Boeing claims the new aircraft are being unfairly subsidized. Northern Ireland is caught up in this row too, as Daniel Lack reports now from Toronto.
Several years behind schedule and more than $1 billion over budget, Bombardier's C-Series passenger jet is finally flying. A modest number of planes have been ordered, including by the U.S. airline Delta. But this U.S. Commerce Department ruling in support of a complaint by rival Boeing could treble the price of the Bombardier planes. Canada's government is holding crisis meetings.
Obviously, we're disappointed by the decision, and I will continue to fight hard for good Canadian jobs.
Canada's not standing alone. In the UK, Bombardier is a major employer in Northern Ireland, where the largest political party props up Prime Minister Theresa May's government. She's expressed bitter disappointment. So have workers at the Bombardier factory in Belfast, who want Britain to take action of its own against Boeing.
It's workers that lose out in any dispute. That's what the politicians need to realise, that we suffer whenever commercial disputes break down. And they need to emphasise to Boeing that they need to settle this without putting thousands of jobs at risk.
Canada, too, has said it'll take a serious look at future business dealings with Boeing. A $5 billion deal to buy fighter jets from the U.S. company could be scrapped, according to the Prime Minister, Justin Trudeau. But the country also says it has legal means to challenge the ruling at the World Trade Organization and under the terms of the North American Free Trade Agreement, NAFTA. With President Trump threatening to scrap that agreement, the current talks to renegotiate NAFTA haven't been going well. Canada says it invests in, not subsidizes, Bombardier. And as it points out, the U.S. has bailed out General Motors in the past and gives Boeing preferential treatment. By some measures, Canada and the U.S. have the world's largest trading relationship, but it's growing more hostile by the day.
Now, the oil market has been in a slump for the past 3 years. But could it be turning a corner? Crude prices are now up 20% from June lows. So that means we are officially back in a bull market for the first time this year. So what's going on? Well, for starters, worldwide demand forecasts are strengthening. According to the latest quarterly report from the International Energy Agency, oil demand is up 2.4% year on year. On the supply side, production cuts by OPEC, Russia, and other producers have also helped tackle the oil glut. Geopolitical issues are also a factor. An independence vote in the oil-rich Iraqi region of Kurdistan has inflamed tensions. Turkey has threatened crippling sanctions on oil trading with Iraqi Kurds. So joining me now from Strasbourg is Professor Giacomo Luciani. Giacomo is the co-director of Executive Master in International Oil and Gas Leadership at the Graduate Institute in Geneva. Thanks for being with us. So what do you put this rise in oil prices down to? Is it all about what's happening in the Kurdish region, or is there more to it than that?
No, I think what's happening in the Kurdish region is certainly sparking a speculative tendency towards higher prices. But what there is behind it is especially demand. Demand increases higher than we expected, which is not surprising because prices have been low, and so consumers are keen to use more oil and oil products.
Well, OPEC made that decision at the beginning of the year to bring down supplies. So perhaps they would like to think that they had a hand in this rise in prices. But is that wishful thinking on their part?
No, of course, it's always a matter of demand and supply. The supply has decreased somewhat. And we have had some withdrawal from the stocks. There is heated debate how much withdrawal from stocks really there has been. Has there been just a shift in stocks from one country to another country? This is difficult to say. Stocks continue to be large, so there is no immediate reason for an increase, a sharp increase in prices at this stage. Prices may be strong, but then we will have to see what the response of supply will be, especially supply in the United States from shale oil, which at these prices is likely to start increasing quite rapidly.
Well, let's talk more about that then. What is your outlook then for the next few months with oil prices? Do you see these prices continuing to rise, and if so, up to what level?
I think prices now are heading towards a level of $60 per barrel. This had to come by sooner or later, but at $60 per barrel, there are plenty of plays, especially in the United States, but also in Canada, that become quite interesting, quite profitable, so supply will increase. Also, the discipline among oil-producing countries may start to erode. People may start saying that, after all, there is no need to maintain production at a low level. And so the tendency, the temptation to increase supply will also be there. So I don't expect that prices may rise much above $60 per barrel at any point in time in the next year.
So how would you assess the overall health of the oil industry right now?
Well, the oil industry is, I believe, doing fundamentally well. There is an equilibrium of demand and supply. Stocks are being slowly reduced. I do not expect any dramatic change in prices. I think prices are kept within a fairly narrow range, which we may define as 50 to 60, maybe. As we reach 2020, they may get to 65. But I am skeptical about any sudden change in prices, except if there is some kind of security or military threat, which then would start a speculative flare-up. But it would be a flare-up, if prices increase very high for a short period of time. This doesn't have much importance, in fact.
But looking at this long term, when you look at things like further development towards electric cars, United Kingdom recently said that they were going to phase all fossil fuel cars by 2040. If you look at China, they're heading in that direction as well. And China is, of course, a huge buyer of oil right now. What sort of an effect is that going to have on the industry as a whole long term?
It will have an effect, but it should not be exaggerated. The world is not the UK or France or China even. You know, China is a very important country, but there are other important countries. And I think the 2040 is not exactly around the corner. There are more than 20 years to get there. Perceptions may change. The future of electric cars has to be proven. It will be proven, I believe. You know, this is a tendency that will play out, but progressively. So when people speak of peak oil demand, this should not be viewed as a dramatic peak after which there is a collapse in demand. I think there will be a long period in which oil will remain in demand, but perhaps this demand will not grow as much as it has grown in the past.
Good to speak with you, Professor Giacomo Luciani. Thanks very much for being with us.
Thank you.
And finally, if you're going to have a digital discussion, where better than the birthplace of Skype? Rory Challens reports from Tallinn in Estonia.
Coding for kids. These Estonian children haven't started high school yet, but already they're programming robots.
You can really, if you know it really well, you can teach people who haven't learned it, and it's really fun, so people will love to learn it.
My dream job is to become a coder because it's really great fun.
The aim is to create a generation with a smarter relationship with technology, digital skills for everyone. And if all goes well, someday one of those kids might be able to build another Skype. This is easily Estonia's biggest tech success story. The company allows you to make video and voice calls over the internet and was bought by Microsoft in 2011 for $8.5 billion. Startup entrepreneurship is a natural fit for a country that's spent the past 2 decades turning itself into one of the most advanced digital societies in the world.
I'm kind of proud to say that Skype did have a really big influence there, because one is that it functioned as a sort of boot camp. Then it just created a bunch of wealthy people who could invest. And finally, I think it's because Estonia is small and people know each other, so people went oh, I went to high school with these guys. If they can do it, so can I.
Jan is now an investor in new Estonian startups.
Here I'm trying to learn Spanish.
Like the language learning app Linguist. I asked its chief operating officer whether being Estonian makes young companies here think differently.
Estonia is very small, it's 1.3 million people. So it's a very domestic market, basically doesn't exist. So it means that from the day one you need to think global.
Startup culture and overcoming the country's diminutive size also inspired the Estonian government's e-residency program. Costing $100 or so, an e-residency invites business people from anywhere in the world to remotely create a company here and gain access to the country's streamlined digital infrastructure. It doesn't bring in much money, but it does foster the networks Estonia values.
You need to have a tax expert or legal expert, you need to have a virtual office, and if you need those kind of services, we put you in touch with Estonian companies. So it makes a snowball effect, and a lot of Estonian companies benefit from the services they provide to e-residents.
Estonia believes countries will one day compete for e-residents based on the quality of their digital services and business environments. If that prediction's correct, Estonia already has a significant lead.
On next week's show, we'll be looking at Donald Trump's tax ambitions, why his opponents say his proposals will only increase the gap between rich and poor. But that is our show for this week. You can get in touch with us by tweeting me @HazemSeeker, and do use the hashtag AJCTC when you do, or drop us an email. countingthecost@aljazeera.net is our address. But there's more for you online at aljazeera.com. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That is it for this edition of Counting the Cost. I'm Hazem Seeker from the whole team. Thanks for joining us. The news on Al Jazeera is next.